Hello and welcome to the Fibonacci free video for Monday, March the 4th. This is David, and I want to start things by just recapping some of what we talked about here on Friday when we took a look at Apple, took a look at the notable close below this voodoo fire line, and we talked about how that was a harbinger of perhaps additional downside action, action that should be concerning to Apple shareholders if it didn't quickly recover that fire line level, noting that there were still other levels to break, symmetry levels down from the high, which we're down here at about 177, but we gapped below that, gapped below the 61.8% retracement of the move up from October and closing below those levels. So we know that we need to see a lot out of this name if it's going to rehabilitate itself. If it can find support above this 180.66 level, then let's consider again at least the potential for some more upside in Apple, but I'm really pretty disinterested in this name unless it can do that. So we had some warnings of today's drop. We will see what happens next. Maybe it recovers, but I will wait until it actually does before renewing my my interest here. So that's just a recap of what we talked about there. Let's take a look now instead at Nvidia, which has been going the other direction. Fresh new all-time highs today, noting that Friday it closed above its fire line, one that it had poked its head above the day after, well, 2 days after earnings, right? And now is trying to explore further upside. Now there is perhaps some short-term resistance here at this level. So these fire lines are our primary, most important of the voodoo line levels. Now, the third most important are these snow lines. Because we're out on a daily chart, I'm not showing the really minor skylines that are in here. But this 878 and 21 cent level is going to be the next hurdle for Nvidia to get above to show us that it has some interest in maintaining that upside. So it got most of the way there today, just about a point and change shy of those shy of that level. But there's some other reasons to kind of focus on that level. So if we look at some of these targets or some of these pullbacks that we've seen along the road higher, including this sort of pullback into the low ahead of earnings, note that if we measure the move back up proportional to the decline, that 261.8% Fibonacci proportion is also at this same spot. So it is a place that it could pull back from. So just like Apple, I'm going to wait for a clean break of the fireline level to really convince me that this is done to the upside. But if we were going to point to a place nearby where we could pull back to retest that fireline level, this is it. If we look at some of the smaller pullbacks, like this one right here, and measure it, the same way, it's not one of the proportions we usually use, but if we measure that move down, we can look and we can see that the move back up is exactly 2 times the prior move to the downside. Let's try this again. All right, we want the 200 level, not the 2 level, right? So move back up, double the size of this move down. So again, a proportional spot. Take a look at or keep your eye on that voodoo fire line level, the 805 or 806, kind of right in the middle there, and solidly below that would be a warning, just like we saw in um, in Apple. All right, so that's what I'm keeping my eye on here. I hope you found it useful, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.